Good morning, everybody, and this is your S&P 500 day trade setups for today. So we had some noise from the markets yesterday. So firstly, Walmart came out and said that their revenue was well below expectations, and obviously that's just sparked a fire on inflation fears, because logic dictates that when it's tough out there, consumers start spending money on necessities rather than luxuries or other goods. So that was the first bit of noise, and then we had some more noise come in with Google and Microsoft announcing their results, which were below expectations. But that did come out after the market closed, so I'm not sure whether that has impacted us at all at the moment. But bottom line is we had a big down and then a big up, and we closed on the 155. We've got a crossover here of the moving averages. We've got the oscillators separating far apart. You could argue that you have a bit of divergence from the swing low here. You can see prices high, oscillate low. Lots going on. And you could also argue that this little structure here, let's just do this. Sorry, a bit trigger happy there. I will line it up now for us. There we go. So this is the move up. This is the flag, looking for another move to the upside. And lastly, if you draw a trend line along the bottom here and take that as your neckline, it's the level that we're flirting with right here in the middle at 39.50, then you have a flat top triangle. So lots going on here for the bulls. Big inside bar as well, which is formed. So on the 8 hour, it's looking fairly interesting that we have a continuation. If we start looking at the 3 hour, we've had this drift lower. For all intents and purposes, we're still above the 155, so trend is up, but oscillators have crossed over and pointing up, so that is another signal. Also inside bar here, a bit of a gap though, and we've come back to test this level. So if I do this, sorry, wrong one. We do this, right? That is a double bottom. There's the first leg of the bottom, there's a second leg of the bottom, that's a neckline. So that would give us a target to the upside, which is up there. Now, if I do the following, this was the previous swing high into the flag, and let's say this is the bottom of the flag over there, and I do that, you'll see we're fairly close to hitting that target as well. So I just want to swing here because that's probably what we should be paying attention to. That was the previous consolidation, which would make the most sense. And you can see that's where the flag targets. So yeah, lots going on here on the 8 hour and 3 hour. So let's just get down to levels that we want to pay attention to. The story on the 1 hour is a little bit different. It's a bit of confusion. So we've got a crossover of the moving averages here at this area that I've pretty much given you all week, which is a 39.50. That looks like to be the middle of the range. So that's more than likely where the baseline is at the moment. So find support above that. You're looking for 39.65. Drop below it, you're looking for 39.21. You've got two gaps here. I wouldn't be too surprised to see us drop back down here. 39.20. 3900 again is still the level that I would assume needs to be tested. So 3908. And if I just start dropping it into the structure here, 3900 is a big round number. I would expect that to be tested. Look at the oscillators grouping to the upside. All these gaps are downside. I'm expecting another leg lower. Don't think it's going to be a massive leg lower. I think you are more than likely just going to come and close these gaps and then find some support lower down. So if you look at the 15 minutes, you can see yesterday it's pretty much doing nothing, and then we just drifted lower. So you could have argued that there was ranging below the 155, and you're looking for a break of that range, which came around here, and that triggered the short, hit the target, and then gapped up going into the close. This is the interesting part, because This area here is pretty much after the market closed, and going into the market close, we're gapping. You can see all these gaps. There's one there, a little one here, and a bigger one here. So why did buyers come in going into close? What do they know? And you can see also this break here at the moment is the break of the trend line. So this thing is poised to go either way. Now you could argue that we have something setting up right now, looking for support here for a move up, but you could also argue that it's looking like a top and another leg down. So I'm sit on hands. I'm really sit on hands until the Feds have come out with their song and dance, get all of the noise out the way. We still do have quite a bit of big set of earnings coming out. I suppose today's not that big. It's really just Facebook that's coming out. But Thursday, it's Facebook coming out, but there's a lot of companies coming out. But Thursday is the big one. So we've got Apple and Amazon, and then we've got MasterCard and Pfizer coming out. So that is a massive day on Thursday. And then the volume of companies on Thursday is massive as well. So my gut is saying that the interest rate is going to come out as expected, which is not really going to change the thinking. I think we're going to be waiting to see what's happening with earnings, and I think what's happening is your retail earnings is the one that is worrying people at the moment. So waiting for all the retailers' earnings, I think, is one of the things that you're going to see people doing right now. So yeah, I think that there's a lot of confusion in the market, so nobody really knows what is on the cards. Do we have a bottom? Have we swung low enough? Are we sort of forward looking for a recovery at the moment, or are we just swinging high for another leg lower? I think that's pretty much what's happening, and you can see it in price action because there's no real direction. Nobody's really taking the bull by the horns and driving this higher. Everybody is being very, very cautious. And my advice is follow what they are doing. Follow what the institutions are doing, which is to be cautious right now. So, yeah, I'm sit on hands. Really not interested in this right now. Hope that helps somebody somewhere along the line. And if you do take my advice, I promise you it will be profitable. Money in the pocket is just as profitable as profit on the charts. Anyway, hope that helps, and we will catch up with you tomorrow morning. Cheers for now.